at this point, we are going to jump into the current market context and just talk about some of the expectations for the days ahead. Okay, so let's briefly review what happened so far. And we're looking at a daily chart here, so it's really big picture stuff. The market had broken out, earlier over the summer, established a big balance here, 2-month balance. We had a breakdown from that balance area. We hit the top of an even larger balance area, which acted as larger time frame support. That ended up holding. The market established yet another trading range in between these two balances, and now today marked a breakout from that 3 to 4 day range, which tells you that on the smaller time frames, short term, the buyers are dominant now. They're in control. Our larger time frame bias is going to be neutral because we're simply kind of stuck between two balance areas. And as the market goes higher, we still have some pretty decent resistance built up along the way. Now, if we can crack above 56.58 here, either in the overnight session or heading into tomorrow, then the next area of significant resistance is around 68 to 73. That entire 5-point area is really decent resistance. It's the high of the day over here that launched us to to new lows below the balance. You have a key high volume node up around 72, 73, and 68, 69 is like the launching point of that big move to the downside. So if we can break out now above 56.58, which marks the high of day over here, then we could be setting up for a test of 68 to 71, maybe 72, 73, but that is larger time frame resistance. So first time up into those areas, most likely we will get rejection. We'll probably get nice short setups up there. And how the market responds to the 56.58 here short term is going to be telling as well, because what happened today was the market broke the 3-day balance and just rallied up into the recent high of 56.58. If we continue to hold below that, then technically we're still kind of in a balanced market. If we break out above it, then the 68 to 71 area starts to come into play. And like I said, that will still be an area where sellers can be quite active on first test, because when you're coming back into a balance like this, usually you're not just going to slice right through it. Typically, as you go up, you have these hurdles along the way, and you'll kind of hit that hurdle, pull back, and even if you're eventually going to go higher, typically you'll hit that hurdle, come back a little bit, pull back, balance a bit more, try again, maybe reject again, try again. So when you're dealing with a larger time frame area of support or resistance, typically you're not going to slice through it. It'll take multiple attempts to get through that area. Kind of like on the downside, right? It's not like we were expecting the market just slice right through this larger time frame support. Even if we were going to go lower, it was going to take a couple of tests. You kind of have to bang up against that support a few times, and as you test it, it starts getting weaker and weaker, and then eventually, you kind of go through it, right? So that same concept is going to apply to the upside. If you do break out above 56.58, if you're rallying up into 68 to 71, 72, it's very unlikely that the market is just going to slice right through that zone. It's probably going to hammer away at that zone for a little bit. And it could be, like a couple of days of testing before it goes higher. And on the day time frame, it's very likely to provide edge on the short side. So right now the question is today's breakout a legitimate breakout that is shifting the short-term bias back to the upside? Or are we still going to continue bouncing within a range? Because the breakout can't really be gauged on day one. You need follow through. You need to see the market follow up with continued buying to confirm and solidify that breakout. Think of it like this one green bar that we got back up to 56. that was not enough to change our bias. There had to be follow-up with that. And we didn't get any follow-through, right? Overnight, the market sold off. So, today we've seen some pretty decent momentum to the upside. We've seen a lot of short-term strength, plus 1300, 1400 on the tick. The other markets are participating in the move. NASDAQ made, I think, a new high on the year today. Russell rallied back up. So, as far as we can tell, I mean, it looks legit. It looks like it could go higher. But keep an eye on that 56-58 area. I think that's going to be telling very short term here. Beyond that, 68 to 73, short setups first time up. On the downside, we want to see it holding above the 44 to 46. That kind of marks the balance breakout that took place today. So, looking at the profile chart, this is the breakout that took place today, right? Above 44 quarter to roughly like, 46, 46.75. So if this breakout is going to hold on the upside, then, we definitely want to see it holding above 44 to 46. That area can now act as support in the event that there's a pullback. And if you start taking out this area on the downside, well, now it becomes a failed breakout and you're right back into that bigger balance. And then you can get a decent amount of selling after that, because that means that anyone who bought today would be stuck on the wrong side, and that can lead to some lower prices. So right now, how the market behaves at 56.58 is going to be important short term. On the downside, 44 to 46 is going to be quite telling. We have this HVN at 41 quarter. If we're not holding this, then the next spot is 32.5. If we're not holding that, then it's just kind of step by step, right, on the way down. So 41 doesn't hold, probably going to go down 32.5. This doesn't hold, probably going to go down 23. 23 doesn't hold, well, then you're probably going down to 11.5 to 13.5. We have an open gap over there. That doesn't hold. The next one is, 2100, 2102, right, all the way back down to the lows. So that's generally how these things play out. Is you just have to take it step by step. But these are the key inflection points that are going to tell us what state the market's in, because the zones are not simply areas to be used for entries and exits, but how the market behaves at that zone is also very telling. That is also a signal within itself. So if you take out that 56.58, that's a decent signal on its own. And so far you're seeing some just profit taking and whatnot take place here, but that doesn't mean anything. That can just be short term. In order for this breakout to fail, got to take out 44, 46, and ideally 41s. So those are key levels we're going to keep an eye on, and keep in mind that these levels are going to change from day to day. So if you are trading the S&P, then a very good idea to be a member on the EminiPlayer site. It's priced extremely low because we want everyone to be able to just be a member and be well prepared every day. The market context is evolving on a day-to-day basis. And, ideally you do your own prep work. That's what we teach in the program. But it serves as a nice way to check your prep work and make sure you haven't missed anything. So if you are trading the E-mini S&P specifically, because that's the primary market we trade, the program applies to all markets, by the way. The methodology that's being taught in OpenTrader applies to all markets. It doesn't matter if you're trading the S&P, oil, gold, NASDAQ, Russell, FX, stocks, whatever. We've had all types of traders go through the program and find success. It's, of course, still takes work, a lot of effort, but it's worth it in the end. And the method can be applied equally well across all of these different markets. So, no matter what you're trading, the method will work for you. Some minor changes, right? Like FX doesn't have market internals, but you can trade without market internals. Gold doesn't have internals, so what? Price action always gets more weight anyway, right? Even when we're talking about internals and market breadth, price action always gets more weight. And, so it's a good way to be very much in tune with the context if you are trading the mini S&P. So check that out. All right, guys, that is a wrap for this week's webinar. Thank you for all the questions. Again, welcome to all the new students in the program. And aside from that, enjoy the rest of your evening. Have a great weekend. And we'll talk to all of you again next Wednesday. Good night.